There was also some concern, I think, about some of the initial Trump administration announcements that were signaling tariffs and were signaling the possibility of higher deficits. And that's poison on the long end of the yield curve.
Welcome to Market Pulse with Act Research on FleetOwner.com. I'm Josh Fisher, an editor with Fleet Owner. I'm pleased to be joined with Jim Meil, an analyst and principal with Act Research. We're here at the Act Research's 73rd seminar in Columbus, Indiana. Jim's been to most of them, I believe, and we're going to dive in and talk a little bit about how the industry is shaping up in this prolonged recession. Are there any sort of indications you're getting that we're coming out of it, or are we still in this wait-and-see period?
I think the short answer is we wish there were indicators that we were coming out of it, but we're looking real hard for them. But so far, the signs are not promising. And I think it's fair to say, between uncertainty caused by tariffs, between uncertainty on interest rates, even uncertainty on taxes, and maybe we were thrown a bone in the OBBBA Act. That's hard to pronounce. I think the story is the search goes on. There's hope for 2026, but we sure would like to see some more data and more positive indicators to back up that hope. So we keep looking, Josh.
Yeah, we keep looking, and we keep trying to adjust and live within this tariff world. We're now 6 months into the tariffs are on, they're off, they're on, they're kind of more on. We're averaging about an 18% tariff across the board, so to speak. What are your thoughts on how fleets and other carriers should be adjusting to this? Should they be expecting this just to continue, or is it a wait and see?
When you talk about the factors that are stacked up against the freight recovery, what you're thinking about is tariffs, which are levied against goods, number one. You're thinking about high interest rates, and you're thinking about what it takes to get particularly the manufacturing sector and the housing sector to get some energy again. And housing, I point out, because not only are we talking about building materials, but we're also talking about ancillary activities that are tied to housing, like appliances, like furnishings. So I look and say, when we finally see some clear signals of a revival in manufacturing, when we see some clear signals of a revival in housing, those will be the triggers for a freight recovery.
That makes sense, because of course, even if someone's not buying a new house, if they're moving into a new house that's new to them, they're buying furniture, they're buying appliances, those sorts of things. But the last time the Fed lowered interest raits slightly, that did not help mortgage rates go down, correct? Right. So I'm curious, how you see that playing in with mortgage rates?
Sure. I think if you go back roughly a year ago, when the Federal Reserve gave us 2 rate reductions. In the initial weeks following those rate reductions, we actually did see longer-term rates, as the 10-year Treasury and the 30-year mortgage, they dropped. So that was good news. But then the market started to fear a revival of inflation. And inflation really is the enemy of lower rates, particularly on the long end of the yield curve. Mm-hmm. There was also some concern, I think, about some of the initial Trump administration announcements that were signaling tariffs and were signaling the possibility of higher deficits. And that's poison on the long end of the yield curve. Poison for longer-term rates. So the break that it looked like we were starting to get around September, October of 2024 got reversed pretty much by year-end.
So speaking of breaks, are there specific indicators that you're keeping an eye on that could be a good sign for the industry as the year winds down?
For the industry, what it boils down to, let's start with manufacturing numbers with housing numbers. And I do like to look at so-called sentiment indicators. In the manufacturing sector, on the first day of the month, you will see the Institute for Supply Management publish their purchasing managers' numbers. If we see those start to climb north of 50 is the break-even point. If we see them get north of 50, good sign. In much the same way, the National Association of Home Builders does a survey of home builders. Right now, it's, I believe, at close to 4-year lows. And again, goes back to housing is in some trouble, and we've got 30-year mortgage rates at 6.6, 6.7, 6.8%. I think in order to get housing really energetic and really going again, we need to have interest rates, mortgage rates, down to something like 5.75. I think if you get below 6, that will trigger and ignite some home build. It'll get the home builders excited, and it'll get some home buyers back into the market.
On another news, it's kind of sad news for those of us who like to attend the seminar, but maybe good news for you is it was announced today that you are retiring.
Yes.
Yes, congratulations.
Well, thank you very much.
I'm also curious, though, since this might be one of the last times we get to sit down like this at one of these sessions, is what sort of advice you might have for future analysts within this industry? What are some things that you have learned about how to keep an eye on the trucking and freight world, and what sort of advice would you like to pass on to those who will be carrying the torch?
Boy, that's a great question, and I guess there are two or three things that I would say. Number one, watch everything. Years and years and years ago, I saw a terrific analyst. He was a money manager named Peter Lynch, and I had an opportunity to be a chauffeur for him for an afternoon. And what he did was he asked questions about everything. There was nothing that he saw, even the trivial, that he didn't have a series of questions to say, why is this, what's going on here, so on and so forth. And that made him a great investment manager. He seemed, I think, during his career, to beat the market. So I think the lesson there is be curious about everything, ask questions, don't let anything slide. The other thing is, it's a people business. And one of the things that has kept me in this business is people. It's a great industry. It's a real human business. I mean, we're all driven for profitability, we're all driven for performance, but the people who participate in it are high quality people. So reach out to them, find out from them what's going on. And they tend to be talkers. So people and data. Wow, what an insight!
Who would have thought? Well, Jim, it's been a pleasure talking with you through the years and listening to you, and I've learned a lot just from paying attention, and I hope from asking you a couple questions too. So thank you for your time.
Really appreciate it. Thank you so much.
Thank you.